Hi, good morning.
Good morning.
Today we have Girish here, who's going to take us through the NISM Series 1 Currency Derivatives Certification Exam. Welcome, Girish.
Thank you.
Okay, what exactly is this examination all about?
If we can move further, we have the agenda of the PPT,
Okay.
where we'll be discussing the objective of the exam.
Right.
But to give a brief overview, this exam is conducted to have a basic knowledge about the Indian currency market.
Okay, so
And
what you're saying, this is focused on the Indian currency market.
Indian currency market, and that too on our currency future segment.
Okay.
To give the participants a basic knowledge, a basic working knowledge of how our currency future markets perform.
But the currency option market has also been started, so does this exam take an overview of that as well?
No. Currency options is not included in this PPT,
Okay.
and neither this exam includes your currency options.
Okay, perfect.
Only limited to the currency futures market.
Perfect. So how would you want to take this forward? You want to take us through the PPT, or you have something other thing prepared? You would like to say something?
Primarily, we will be doing it through the PPT, but we won't limit ourselves to the PPT alone, and we will be discussing things in general which are not mentioned in the PPT but might come into the exams.
Okay. So what you're saying is something which is there in PPT we'll discuss.
Yes.
We'll also discuss general thing which you have a feeling can come in the exam.
Yes.
And we will do through the pen that we have. We'll also be doing some notes.
Yes.
Where a student can learn how to calculate at some point of time.
Absolutely. And one thing more, because it is concerned with the forex market, which is in itself a very big market, a very huge market having different characteristics. So we are going to learn not only futures but also different segments of this market, so you have a proper understanding of how this market functions.
So you're saying that you'll also take us through some proper understanding of the market?
Yes, definitely.
And that would be beyond the scope of the exam?
Yeah.
Perfect.
Alright.
So my request is just let us know whenever you're talking of something which is beyond the scope of exam,
Sure.
so that we can mention it while we are teaching.
Definitely.
Okay, so let's go ahead.
Yeah, definitely.
Introduction to currency markets.
Currency markets.
We have done the exam overview.
Yes. So while we were talking in the introductory slide about the exam overview, so here is the objective of the exam:
Okay.
to judge the basics of currency markets and especially the exchange traded currency futures.
Okay.
It is very important to understand what an exchange traded currency future is. Okay. We'll be covering this topic further in the next slides.
Okay.
Second is understanding the trading, clearing and settlement mechanisms and basic investment strategies related with it.
Perfect.
Right. So when we are talking about investment strategies, we'll limit ourselves to hedging strategies, hedging strategies.
So you're saying we'll limit ourselves to hedging strategies. That's what comes in the exam.
Yes, not
Okay.
speculative strategies.
Perfect.
Right. And most importantly, knowing the regulatory environment in which the currency future market operates. It is one of the important segment wherein a lot of questions will come in the exams.
So you're saying this is an important segment,
Yes.
and a student should be well versed with this one.
Yes,
Perfect.
And having an exam structure, you will get 60 questions of total 100 marks.
Yeah.
And one important thing is that minimum pass marks is 60%.
Okay.
Right. And negative marking, here you should be very careful. 25% of the marks allotted for the questions will be deducted for a wrong answer.
So what you're saying is that you have 60 questions, 100 marks, minimum pass mark 60%, and 1/4 is negative marking.
Yes, negative marking. So you have to
Okay.
be very careful while attempting the question, because generally the questions will be a mix of simple questions but with some difficult questions. So you have to be very careful while attempting the question, because your negative marking will have a impact on the total score.
So coming from the master, what the master is saying, that if you don't know, leave it.
Yes, that would be a better
Right.
strategy.
Don't know, leave it. Okay, let's just go ahead.
Yes.
Narrow range of marks.
Yes.
Introduction.
So So when we are talking about foreign exchange, what is the first thing which comes to your mind is it is composed of two words, foreign and exchange.
Right.
So in simple terms, exchanging one currency for another means a foreign exchange.
Right.
Now what would be a forex transaction look like? And we are talking about currency exchange. So the primarily thing which would come to your mind is that when does a forex transaction occurs?
Okay.
Right? So when we are talking about forex transaction, the first thing is import and export.
Right. So that's something that is known to maximum people.
Yes.
While you're importing or exporting something, you need forex.
You need forex.
Absolutely.
Second is your tourism, education, etc.
Yes. So somebody who's going to study abroad needs forex. Somebody who's going to, let's say, for a vacation needs forex outside India.
Yes.
Perfect.
So we can look at this way. Like for example, somebody is coming to India. A foreigner visiting into India, and he pays to the taxi driver something in dollars, which is useless for an Indian person because he cannot transact with dollar.
Absolutely.
Right. So it is useless.
Right.
So the foreigner needs to convert dollars into rupees.
Absolutely.
Which would be suitable for both the foreigner as well as the domestic taxi driver.
Absolutely.
Right. So that is something very important.
So you need to exchange your currency for the local currency.
Yes.
Irrespective, because that is very important, because local currency is what is applicable in one's country.
Yes.
The third you're saying is investment avenues abroad.
Avenues abroad. For
Right.
example, if you want to lock in opportunities which are available in foreign countries, you cannot do it with the help of Indian rupees.
Right.
So if you want to invest in US markets,
True.
you need to convert your rupee into dollars and invest there.
Right.
Likewise, if somebody wants to invest into the Indian equity market, which has been performing exceptionally well over the past few years,
Right.
he needs to convert dollars into Indian rupees.
Right.
So there is the need for converting the foreign currencies.
Right. But there is a limit to this investments that you can
Yeah,
do.
definitely there are limits, but we
That-
won't cover this in this PPT because it is a very exhaustive topic.
Okay.
But basically, you need to understand is that if you want to invest in foreign currency in country outside India,
Right.
you need to convert your currency into that currency.
Absolutely. And the fourth one you're saying is interbank settlement.
Interbank settlement. It is very important because whenever you are exchanging your currency, banks come into the picture
Right.
because they are the institution
Right.
where almost everything is done when it comes to exchanging of currencies.
Absolutely.
And one more important thing is that interbank settlement, when you're talking about interbank settlement, it is exchanging of currencies between two banks.
Right.
Right. So, for example, if you're talking about exchanging of currencies at corporate level, it is done through banks.
Okay.
And the most important feature about this is it is of a relatively bigger size
Right.
as compared to your tourism, education, etc.
Right.
Right. So interbank settlement is large in size.
So you're saying this is one of the largest segments
Yes.
that we need to look at.
Yes. Basically, it is banks exchanging currencies between themselves.
Okay, bank changing. There used to be a bank rate earlier, which was something very similar to that. That two banks can settle currencies on
Yes,
their own.
yes.
Okay, perfect. So I'll quickly recap what we just studied. We said that forex transactions are required majorly for the imports and exports.
Yes.
We said that they're required for tourism and education
Yeah, you can say
Or-
that
or
for
for-
retail level.
at retail level.
Yes.
That's a better way of putting it. So let me just put it retail level. You also said that it's required if you want investments to be done, and
Yes.
fourth also for interbank settlements.
Interbank settlements.
Perfect. So we'll take the next PPT.
Yeah.
Yeah.
Here we'll be covering the features of currency market.
Yes.
The most important feature is that it is the largest financial market in the world.
Okay.
with average daily turnover of approximately 3.8 trillion and is expected to surpass $5 trillion in 2010.
I guess this is based on the NISM, which was
Yeah.
examination made.
Yes,
So the data is little old,
Yeah,
but
might have crossed the
5 trillion mark
dollar
also. So,
already.
but what is very important is that it is the largest financial market.
Financial market.
Right, absolutely.
The second most important thing is that the forex market at any time is greater than the stock market, and you can judge it by the simple thing that it is 75 times greater than the combined volumes at NYSE, which is New York Stock Exchange, which is the world's biggest stock exchange.
True.
Right? And the third important thing, very important, which differentiates it from the other market, is that it is round the clock market, starting from Sydney and Tokyo in the east, through Hong Kong, Singapore, Bahrain, London and New York.
Okay.
So basically it is a 24 into 5 environment because it is closed on Saturdays and Sundays. So you can transact currencies within 24 hours.
Wonderful. And then you're saying it's dominated
Yeah,
by
it is
large
dominated
banks.
by large multinational banks, central banks, hedge funds and currency brokers. I've already mentioned banks are the primarily institution which actively participate in the market due to their sheer volumes,
Right.
and they being the important they have an important position in this market,
Okay.
simply because at retail level you cannot go and exchange currencies. So you have to route your transaction through banks, and that's why majority of the volumes are dominated by banks.
Okay, Girish, what we'll do is we'll take the next part of the presentation in the next video.
Okay.
So what I'll do is I'll just quickly wind up here by saying that you said it's the largest financial market.
Largest financial market.
It's one of the great. It's bigger than any stock market, as you've given example of NYSE.
Yeah.
It's dominated by large multinational banks, and it's a round the clock
Yeah.
market.
One thing I would like to add in here is you don't confuse yourself with 24 into 5 that you can at any time transact in this market. What I mean is that, for example, if you are trading in stocks which have a timing of say 9 a.m. to 3:30 in India,
Right.
in currencies you have a readily available market 24 into 5.
True.
Which means that if one market is closed in US,
Right.
it simultaneously opens in Europe or Asia.
Right.
So at any particular point of time, you have a market available where you can trade currencies.
Perfect.
Right.
So thank you, Girish. What we'll do is we'll quickly get back to you in the next video.
Okay.
Thank you.